For more on how investors can better understand the global oil market, I recently spoke with David Greenberg. He's president of Greenberg Capital and former executive board member for the New York Mercantile Exchange. He unpacked his outlook for crude following last week's pain. Take a look.
What's really a problem is a tremendous amount of oil is used often to speculate, to be a hedge, and more importantly, to be a collateral for loans. Because you could, if crude oil is trading 50, you could loan against a building or a project at 40, at 35. There's always a big, big gap. But we went through that gap and then we passed through it, and we passed through it. And I got to tell you something, what you might see is real issues in the banking system on defaults that are going to come forward. We're not sure, but it will probably most likely happen in some way, shape, or form. It's going to be very interesting to see how this unfolds on so many different levels.
This week, we'll hear from Chevron and Exxon. Both are reporting earnings. What are you going to be looking for to get a sense of the impact on some of the big energy companies?
It's really their long-term guidance. This is going to be something, listen, there's going to be a time that we will catch up. It's going to take some time. It could take 6 months, it could take a year and a half. It all depends on how this soft opening of the entire planet, which I never thought I'd ever say, is going to happen. And, listen, the last time oil companies really lost money, because let's be realistic, where they get it out of the ground and they have their own storage facilities, and a lot of them have their own refinery facilities, it's a much different game. So where they might not make as much, then you might see the stock come off, But I've bought some oil company stocks just for the long term. I put them away in my account and I'm not looking at them for a year. Because I think still in the long term, it'll float back up to a natural price of where it was and probably where it should be. There's always opportunities. And I think you're going to see opportunities in companies that, just like when the dot-com era blew up, there are certain companies, E-Trade, and all these other companies that had fundamentally good, sound, Amazon was one of them, had fundamentally good, sound business practices. They weren't over-leveraged. They weren't in debt. And you know what? There are companies that got pulled down with the suction of this market, both in stocks and commodities, that will find value.
Can you give us any names of the opportunities that you like?
Well, I bought FANG, F-A-N-G. Actually, I bought FANG when crude oil came off $14 one night. This was a few weeks ago, and ended up coming in only about $8 lower. Now, I remember during the Gulf War when I was long, when the market came in $8 lower, and trust me, that was a bad day for me. And I thought I'd never see anything like that again. So when that market came in $14 lower, some of the oil stocks just kind of obliterated. And I bought FANG, and honestly, I was a little shocked. I bought it like $15, I think, and 80 cents or something. It's trading like $30 now or something. And I sold out half of my position because as a trader, you always want to take some profits. And I'm just going to leave that in my account.
My thanks to David Greenberg. That concludes today's market brief. Stay safe, stay healthy at home. I'm Caroline Woods. Thanks so much for watching.